We follow it pretty closely. And then, again, that's part of why I very strongly believe that by the time you get to 2027 and beyond, rents and values are going to be moving up significantly because, yeah, we had hit a generational high in deliveries last year, but now the pendulum has swung the other direction. Starts and new permits are way, way down, which means 2 to 3 years from now, there's going to be very little being delivered and supply is going to shrink. And if that's one of the benefits of commercial real estate investing is certain aspects of the cycle are incredibly easy to predict because the leading indicators are 2 to 3 years out. So you can tell what's going to happen to supply and demand. So we see this current localized supply glut as very much an opportunity because it's very temporary. And then something else that's not getting talked about as much is the absorption this year has been huge. The fact that we've been delivering generationally high amounts of units, and yes, leasing's a little slower than everyone hoped and all that. But when you look at the absorption numbers, their demand is actually really strong. And if that demand stays anywhere close to where it is, and the supply goes back to normal and then below normal, it's going to create a squeeze in terms of affordability and availability. And so again, rents and values will be heading back up.
So interesting point that you made, I think, with the rent value. So I agree with the fundamental thesis is that supply is going to shrink. There's going to be this huge shortage, and then there should be this period of high rent increases. My concern is on the properties we bought in 2022, like we've had 30% rent increases in these last 3 years, and we're in the affordable housing space. And we're in a situation where housing authority isn't taking the brunt of it as they used to do because they have their own budgets and they're complaining that they're not getting increased budgets. So our concern is that in 2, 3 years, yes, the demand is going to be there. However, there is going to be a cap to, I don't think we could do another wave of 30% rent increases and still have tenants afford those properties. So I don't know. How do you feel like will the next period, this next 3 years, which will be great for supply and demand, however, are any concerns where the rent increases that we should get, we won't be able to get because of the last 3 years of rent increases that just went into effect?
Oh yeah, no, affordability is a huge issue, and that is one of our top screen factors that we use for screening properties, whether or not we'll look at them. Our goal is to make sure that our final rent is basically ideally 25% or less of the median income in the area. For example, let's just say for round numbers that we can do in our head. Let's say we're buying a property and okay, after renovations, we can get the rent to be $1,000 a month. That's $12,000 a year. So ideally, that property is located in a market where the median income is $48,000, meaning the median family can rent that unit and only have to allocate 25% of their income to cover that rent. That makes it affordable. That means a vast majority of people in that market can pay that rent, and there's room they can probably pay more if need be. The further down you get the chain, the bigger and bigger of an issue that's going to become. You're absolutely right. I think part of what you're going to see is, for one, I mean, here in the United States, we're spoiled. We're all used to all having our own giant units to ourselves at pretty much all income levels. You go to the rest of the world, that's generally not the case. Apartments tend to be and houses tend to be far smaller. There's multiple people living in them. And I think at the lower end of the spectrum is what we're going to see is a trend in that direction of more roommates.